Hey everybody, one of the real estate stocks that I've owned for a long time is called EPR Properties, ticker symbol EPR, and it's had a pretty interesting few months. We'll get into that in a second. Before we do, please take a minute and click the link you see on your screen. Check out a message from my sponsor, The Motley Fool. It's the best way to support the work I'm doing on my YouTube channel, and you'll get the top 10 stocks to buy right now. So, just a quick background, EPR Properties, they are the experiential REIT. They own properties ranging from movie theaters to water parks to ski resorts, a lot of things like that. Properties people that sell people experiences, not products. So I mentioned movie theaters there. Movie theaters are its number one property type, and that's why this stock has been underperforming lately. Its top tenants are AMC, which is for doing fairly well, and Regal Entertainment, which has been in bankruptcy proceedings. So that's their second largest movie theater tenant. Movie theaters make up just under half of their portfolio. So this is a big deal. It's been weighing on the stock because they've been in negotiations with Regal for a while and trying to resolve the bankruptcy situation and let Regal continue to operate the properties it wants to and pay rent and things like that. So we finally got a resolution to the Regal bankruptcy. Regal agreed to a new master lease agreement that keeps 41 out of the 57 properties that they operate that are owned by EPR. So of the 16 other properties, 5 of them will be taken over by new operators. So pretty smooth transition. The other 11 EPR is going to sell and free up some capital. EPR has been wanting to get rid of some of its movie theaters and decrease that concentration for a long time, and this will allow it to do that. So with that 41 remaining properties, Regal's going to be paying $65 million in base rent. That rises by 10% every 5 years. And the best part is there is a performance-based component. If the theaters do well, Regal is going to pay EPR a percentage of the sales over a certain threshold. So based on just 2024 box office projections, those 41 Regal leased properties plus the 5 that are being taken over by other operators are expected to replace roughly 96% of the lease revenue that EPR was getting from Regal on all 57 of those properties previously. So, in other words, they're almost recapturing all of the rent that Regal was paying them, and they get to sell 11 of their properties and put some money in their pocket, and then reinvest that in other properties. And the performance-based component, if the box office performs even better than expected, they could end up replacing well over 100% of their pre-bankruptcy revenue from Regal. So pretty attractive lease terms. Looking beyond that, just the second quarter was very, very good. EPR's revenue grew 8% year over year. Its earnings or funds from operations per share, the real estate version, was higher by 7%. If I'm looking forward, their full year guidance is very attractive. They finally issued full year guidance. They were waiting for the Regal bankruptcy to be finalized before that happened. And looking at their full year guidance, the stock trades for about 8 times full year earnings. Very, very cheap stock, especially when that full year range is 9% higher than 2022 earnings. And it also gives EPR, which has a 7% or so dividend yield, a very attractive 65% payout ratio, which is very low for a REIT. So that gives it a nice margin of safety too, in case something happens, in case the recession affects some of their other properties. So with those lease terms, I'm obviously watching box office data going forward. EPR's debt is a little bit on the higher side for its market cap, so I'll be keeping an eye on that. Hopefully when it sells the 11 properties that Regal is giving back, it uses the proceeds to pay down a little bit of debt. And like I said, that valuation is just very, very cheap. So this is a stock that if the current price holds, it is definitely on my watch list to buy more. I'd love to know what you think about EPR and the movie theater business in general, because it's kind of a polarizing topic lately. So please leave me some comments. I'll do my best to respond to each of them individually. And thanks for watching. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.